For more movers, let's welcome in Diane King Hall, host of Morning Movers. And Diane, you know, we've talked a lot about Meta and Microsoft, but there are several other names reporting today and some pretty big movers. So let's get right into it and start with CVS because it's a big mover to the upside, and the bar is pretty high here because CVS has had a really impressive year-to-date performance.
It has. I mean, the stock was already up more than 50% before today's move. So they crushed expectations across the board. They beat on the bottom line and the top line. Adjusted EPS was $2.25 a share. She was looking for $1.71. Revenue came in at $94.59 billion, so topping $94.5 billion. That was better than what the street was looking for. The street was looking for just under $93 billion. So a strong beat. And the medical loss ratio, you saw that improve as well, Caroline. That came in at 87.3%. Lower is better than what the forecast is. The forecast is for more than 88%. It basically means more premiums were retained as profit, in other words, for that. They've raised their full year guidance. And so this is a cycle of earnings season where guidance has been all over the place from different companies. So it's not the traditional cycle where you look for a beat and a raise, right? And so it's more unusual this cycle. And so seeing CVS raise that really bodes well for investors today. They're boosting their EPS guidance to a range of $6 to $6.20. That's up from $5.75 to $6. It shows they just have growing confidence in managing those medical costs. We know that's been a headwind for the company in recent years, and just stabilizing their core businesses. And speaking of those core businesses, they're making some changes here. They're leaving the Affordable Care Act marketplace, basically the Obamacare business. They're going to also increase access to Wegovy, so that shows a preference towards Wegovy versus Mounjaro. And I know we're going to get into some results from Eli Lilly in a moment. So they've essentially said they've decided to exit the healthcare exchange business. They have that Aetna operation there, inside there, and they want to essentially focus on their more profitable business. We know that this is a part of a big turnaround effort from CVS. We know they installed a new CEO towards the end of last year. So this is just a part of overall their shift. And so they've got some tailwinds for the company right now. And we already saw the stock pop off of that shift in leadership at the top of the company. And so essentially we're seeing sentiment change for CVS now.
Yeah, I was just taking a look at the median price target because CVS is trading only 2% away from the 52-week high. It looks like analysts on the whole think it can move higher from here. Median price target $74 a share. Have any weighed in yet, or still too soon?
I haven't seen any updates yet to price targets right now. So around basically where you pointed out now, we could potentially certainly see a re-rating when it comes to this one, especially given their guidance from here.
Yeah, I mean, not just a reaffirmation or affirmation, but the fact that they raised guidance, certainly taken as good news today. CVS Health up about 7% today. Moving to the downside, though, is Eli Lilly. You talked about Wegovy. Well, Eli Lilly has its Zepbound weight loss drug, and weight loss still a bright spot, but not enough to give a boost to Eli Lilly shares.
It is a bright spot still as well, and we'll get into that. And even though they beat on their top line for revenue, it was a little weaker than expected for EPS. Adjusted EPS came in at $3.34 shares. She was looking for $3.52 on consensus. Revenue was $12.73 billion, but they've lowered their full year profit guidance, and that's because of the charge they took tied to that acquisition of the cancer drug. So now they're expecting their adjusted fiscal 2025 earnings to come in between $20.78 and $22.28 per share. That's down from their previous guidance of between $22.50 to $24 a share. They have maintained their 2025 sales guidance to a range of between 58 and 61 billion. So they are at least sticking with their sales guidance. GLP-1 still a growth driver for the company. Mounjaro, Zepbound, that accounted for $6.1 billion in revenue. That's essentially nearly half of the revenue during the period. GLP-1 revenue, they did come in ahead of consensus. Zepbound beat, Mounjaro beat expectations there. But that's obviously critical to their narrative from here. And so, you know, even hearing the news for the preference over at CVS, obviously that doesn't help Eli Lilly. Now, Lilly is still the market leader, so they have to maintain that momentum in terms of some industry data. Zepbound prescriptions are higher than Wegovy subscriptions. you've seen a more than 300% increase in Zepbound subscriptions on a year-over-year basis, whereas Wegovy is up more than 60% on a year-over-year basis.
Okay, so Eli Lilly shares down more than 7% right now, still up about 8%
For the
year
year,
to date,
yeah.
so outperforming the broader market. And I do think it's important to note that the cut guidance for the profit isn't necessarily because of macro headwinds or demand. As you said, it's because of a cancer treatment drug deal.
It is. And they also spoke to tariff and tariff risk there. They're committing billions to U.S. production. So obviously they're trying to protect any potential impact from pharmaceutical tariff risk.
Yeah. Certainly music to the Trump administration's ears as well. In terms of Qualcomm, another loser today after earnings, and this one, another one that's lower, likely because of disappointing guidance here.
Exactly.
Shares down about 7%, and also talked about impact of tariffs.
They did. They talked about that on their earnings call as well. So adjusted EPS was $2.85 a share. That was a beat. Revenue came in at $10.84 billion. That was also better than expected, but obviously we know, Caroline, this is the trailing quarter and Wall Street cares about what's ahead. And guidance still does matter, especially if you can kind of account for what's happening with tariff headwinds. Their handset chip sales that did increase 12% on a year-over-year basis. In terms of their forecast, the outlook for the current quarter is what came in a little bit light. They're guiding for between 9.9 and 10.7 billion for revenue. EPS guidance was actually roughly in line, but again, it's that revenue picture. Now, in this most recent quarter, they did have strength beyond smartphones. You saw auto chips surge 59%, but that's a small segment of their total sales. That just accounts for about $1 billion in sales for them. On tariffs, they said they're well positioned on their earnings call because of their globally diversified supply chain. But they said the guidance for the upcoming quarter is based on the current assessment of the financial impact of tariffs. They said as the situation remains dynamic, this is a quote, we'll continue to closely monitor for potential changes.
Okay.
So if anything changes, obviously on the tariff front, you could certainly see them adjusting the guidance.
This is one where I did see a whole bunch of price target cuts. So analysts clearly, a little bit more downbeat following these results.
Yes, definitely. We're seeing Baird, who have lowered their price target to $216 a share. That's the most recent update. You'd see Benchmark, they've reduced their price target to $200 a share. They are still maintaining a buy rating on this. Wells Fargo has lowered their price target to $140 a share, so they're essentially where they are. They're pretty neutral, or they're underweight on this one. Loop Capital has lowered their price target to $155 a share. They've got a hold rating on Qualcomm, and it has had, certainly weaker performance.
Analysts pretty split on this.
They
Still
are.
the majority in the buy camp, but 46% right now rated as a hold. So definitely split, and shares certainly taking a hit, down about almost 7% right now. Diane King Hall, thanks so much for breaking down those earnings movers for us.